Today in crypto, cryptocurrency exchanges are pushing for greater transparency. Nike is getting into crypto, key Bitcoin demographic trends, and the end of fiat as we know it. And let's just get into it, guys. The US-based cryptocurrency exchange ErisX has officially announced the public launch of its spot market exchange with USD markets for Bitcoin, Ethereum, Bitcoin Cash, and Litecoin. Now, the ErisX spot exchange is just the first part of a platform that will make available both spot price crypto trading and a regulated futures exchange. As a reminder, of course, ErisX is one of the main players which right now is trying to get the CFTC to approve its Bitcoin futures contracts. ErisX, like the other major players, have been sitting around waiting for a very long time for approval of its Bitcoin futures products. It will also be launching a crypto clearinghouse. Also worth remembering is that ErisX is backed by Nasdaq Ventures and Fidelity. So kind of a big deal, and it is gearing up to be a very big crypto player. Also, speaking of exchanges, CoinMarketCap has announced that it'll be working with the major cryptocurrency exchanges on an initiative to try and make the crypto market price data much more transparent than it currently is. Now, this is a problem which has been well documented by recent reports, for example, from Bitwise and from others. The alliance includes Binance, Bittrex, OKX, Huobi, Liquid, Upbit, KuCoin, HitBTC, Gate.io, OceanX, and Bitfinex, all of which will be providing insights about how to increase transparency in the industry. CoinMarketCap is also demanding that all cryptocurrency exchanges which are featured on CoinMarketCap must provide live trading data and live order book data, and any exchange which doesn't comply with that within the next 40 days will be delisted from the adjusted volume section. So they can still be in the reported volume section. Next up is a great article out of CoinDesk on Turkey, the Bitcoin capital of the Middle East, apparently. Data shows that the Turkish lira accounts for 6% of crypto fiat liquidity, at least up to this point in 2019. But Turkey, with its population of only 80 million people, only accounts for a little more than 1% of the world's population. So you can see how popular crypto is. Now, this new data sees the lira retaining its 2018 rank as the fifth most popular fiat to crypto pair worldwide. Also, according to a survey conducted last year by ING Bank, Turkey already had the highest percentage of Bitcoin holders in Europe, which is very impressive, with 18% of Turkish respondents saying that they own cryptocurrency. Damn, that's a lot of people. As always, you have to be suspicious of those numbers, who they asked, etc., etc. But the story of Bitcoin in Turkey is a case of both interest from a tech-savvy community, but also one of a struggling Turkish lira, like so many fiat currencies, continues to go down and down and down and down. The 10-year lira versus USD chart tells a very interesting story. And Turks understand that while their own currency continues to be devalued into uselessness, that Bitcoin, even though down currently, historically, keeps moving up. The fiat fantasy continues to crumble as inflation robs citizens the world over of their wealth. Which leads me to a funny little story out of England. The Bank of England governor has said about crypto assets. He said, crypto assets are too volatile to be a store of value, and that the high volatility and the relatively high cost of crypto transaction settlements don't make cryptocurrencies as practical as it stands as a currency. High cost of cryptocurrency transactions? Really, Bank of England governor? Even Bitcoin, which is the most expensive to send, is actually quite cheap. and many cryptos are much cheaper than Bitcoin. Now you compare this with banks that charge you to withdraw your money, to deposit your money. They charge cash handling fees, they charge account fees, they charge card fees, and they give such paltry interest rates that it is absolutely laughable. Plus, we can throw in all the other stuff. There's Forex fees and conversion fees and overdraft fees and late fees. In fact, if you can imagine a service that a bank can offer, then the bank can come up with a fee for it. That's innovation in banking, guys. Add to that, of course, the insanity that banks are closed on a Sunday. They're closed after 5 p.m. They can freeze your account whenever they want with zero repercussions. And they can report you spending your money in ways that they don't approve of to the government. Cool stuff. Bankers, funny people, aren't they? But okay, what about the volatility part? Well, he isn't necessarily wrong on that. Bitcoin is volatile right now. We are still in the early price discovery stages for Bitcoin. But the long-term trend is pointing up, not down, unlike the British pound, which, like the US dollar, has had an eye-watering descent in terms of purchasing power, reminiscent of some of the finest shitcoins over its long history. But the big difference here is that this has happened over decades, not over days like we might see with some different crypto tokens. But the tough truth is that no fiat currency is a safe haven. They are all inflationary. They are all manipulated by big banks or crooked politicians, and they run on faith. And the history of fiat collapsing is well documented. Hopefully not coming to a country near you, but that is the potential reality of fiat currency versus Bitcoin, which is backed by math. I know which one I trust. Around the world, we see mismanaged economies and mismanaged currencies with those pieces of paper that everyone imaginarily puts value on plummeting in value, leaving populations who have no control over their governments scrambling to put food on the table when their local fiat currency crashes. We have seen it in Ukraine, we've seen it in Zimbabwe, we're seeing it right now in Venezuela and other countries all around the world, and we will see it again in places that will surprise and in places that will shock the world and shake the foundations of the global economy. The fact is that Bitcoin is the best money the world has ever known, which is currently in a multi-decade price discovery phase. The potential of buying Bitcoin now is like buying $1 for a penny. On to our next story. Nike, yes, the guys who make the shoes, is apparently making moves to get into the crypto industry. Now they are following in the footsteps of, well, most major companies at this point, it seems. Specifically, the company has filed a patent. The corporation's patent filing mentions things like crypto wallets, both a software and a hardware wallet, as well as downloadable mobile applications for providing access to cryptocurrency collectibles, cryptocurrency art, and different application tokens, and also makes mention of an online marketplace featuring, unsurprisingly, footwear, but also clothing as potential use cases of that crypto token. Now, this would seem to indicate that Nike might indeed be integrating cryptocurrencies into its growing online marketing business, which has brought in more than $1 billion in the first quarter of this year alone. A digital token like this would actually be a great use case. Imagine getting Nike tokens as a cashback reward when you go and buy a pair of shoes. Or maybe you get it as a reward for running with the Nike Running Club every week. Or you can get some kind of non-fungible sneaker token of a famous runner, for example, signed by that runner. There are loads of possibilities here. I just hope that they don't build their own chain. It would be great to see something like this coming on Ethereum, for example. Also, this filing does not mean definitively that anything will be launched anytime soon, as the trademarking process, of course, can be quite slow and can take months to complete. I seriously think, though, that any company not in crypto in a few years will be like a company without an email address or without internet access. everyone is going to be doing it. Every company is going to be into it. And our final story today, Bitcoin as a demographic megatrend, at least according to some new research, which shows that in spite of the rough market conditions over the last year, that Bitcoin awareness, familiarity, perception, conviction, propensity to purchase, and ownership have all either increased or improved significantly, dramatically, in many cases. Now, I just wanted to share a few of those numbers and insights with you. 48% of people aged 18 to 34 strongly or somewhat agree that it's likely that most people will be using Bitcoin in the next 10 years. And that is a very significant amount of people considering where we are in the current perception of Bitcoin. And just look at everything that is happening. Look at all the major companies around the world that are scrambling right now to get into crypto. That number really makes sense to me, actually. 27% of people indicated that they are very or somewhat likely to buy Bitcoin in the next 5 years. I can also imagine that this question, if asked differently, if we'd asked them about altcoins, that we'd actually have a few more percentage of people who would not want to buy Bitcoin because they perceive it as being too expensive or whatever it might be, but would actually go out and, buy XRP or some other kind of altcoin. It's also fascinating to see the growing shift in attitude towards Bitcoin versus the more legacy investments. 21% of people preferring Bitcoin to government bonds. I'm not surprised there. 17% prefer Bitcoin to stocks, 14% prefer Bitcoin to real estate, and 12% prefer Bitcoin to gold. This number rises even more when we look at just the 18 to 34 year age group, where 30% of people prefer Bitcoin to government bonds, 27% prefer Bitcoin to stocks, 24% prefer Bitcoin to real estate, and 22% said that they would prefer Bitcoin to gold. In total, 11% of all respondents asked owned Bitcoin, with 20% of 18 to 34-year-olds owning Bitcoin. Now, these are just a few interesting highlights. Of course, links always down below if you want to check out the full version of that report. But ultimately, Bitcoin is shaping up to be a demographic megatrend in money. Younger demographics are leading in terms of Bitcoin awareness. They're leading in terms of familiarity. The perception is very high among this age group, the conviction that it will be valuable also. And they want to purchase it, and the ownership rates are going up. And all of that is awesome, and to be honest, unsurprising considering how, on average, younger users are, more familiar with technology. But just a quick moment as a shout out to everyone who is over 34 out there and who is into Bitcoin. Even though this research paints it that, young people are flooding into Bitcoin, I know that there are a lot of you out there from all different age groups who are invested into crypto, because you know what? Bitcoin is for everyone. Bitcoin doesn't care about your age, your sex, your religion, your ethnicity, what you have for breakfast. That being said, though, it is certainly some interesting data to take into account to see that there is so much interest from the younger generations who look at stocks and all these other things as increasingly unfavorable or uninteresting investments. Anyway, as always, just my 2 Satoshis on these stories. I would love to know what you think about these stories or anything else happening in crypto down below in the comment section. If you have not yet checked out Cryptocurrency Explained, it is a free 5-hour course designed for beginners. So if you know somebody who wants to get into crypto and they're like, how do I do that? Send them over to thecryptolark.org. I've got the playlist hosted here on YouTube as well, or you can find the course on Udemy, Cryptocurrency Explained. Thank you so much again for taking the time out here today to come and watch this video. If you did enjoy it, leave a thumbs up on it. Make sure to subscribe to the channel if you are new around here. Long live the blockchain, and peace out till next time.